The first tick on the Nifty is in the red. The Nifty and the Sensex have scaled yet another record high.
Midcaps really are stealing the show. 0.8% higher on the midcap side.
For the longest time, the Nifty was hovering around 19,450. It's just in the last 10 minutes, it made a dash towards 19,490. And from there, it's retreated a tad bit.
Yeah, the Nifty that goes home with a gain of close to around 100 points. It was threatening to get past that 19,500 odd mark, but we couldn't sustain at higher levels. The high for the day was 19,515. Hello and welcome to Markets Today, the show where we highlight the 6 hours of the day's trading action in just 5 top headlines. I'm Eicher Motors. Here are the headlines for the day. The Sensex gains over 300 points as the bulls move into uncharted waters. The Nifty ends at record highs for the 6th straight session. Except Eicher Motors, all the Nifty stocks have recorded gains in the last 8 sessions. The auto index hits record highs. Mahindra & Mahindra, Tata Motors, they rise as well. Sale of passenger vehicles crossed 2 million mark for the first time in the first 6 months of 2023. The three-wheeler sales also hit a record high. Two-wheelers, they remain a sore thumb as it remains below the pre-COVID levels. A weak business update for Q1 drags Marico lower. Low single-digit growth in volumes and subdued rural sales disappoint the street. Godrej Consumer products also tumbles despite expecting double-digit growth in sales on a consolidated basis. Tata Power gains over 3% on winning a smart metering project worth over 1,700 crore rupees. Hindustan Zinc rallies close to 8% as it considers announcing an interim dividend on July 8th. DCB Bank surges over 5% after the RBI allows Tata Mutual Fund to raise its stake in the lender. Minutes of the US Federal Open Market Committee meeting in June reveal that all but 2 of the 18 members expect at least one more rate hike this year, with majority expecting 2 or more. This swings the pendulum sharply away from any softening. Well, it was another good day for the bulls. The Nifty ended at record highs for the 6th straight day and reached the 19,500 mark in intraday trade. In fact, the Nifty has gained close to 5% in the last 8 sessions. The mid-caps, they outperform the blue chips, with the index soaring 1%. India's market capitalization continues to scale higher, ending around 302 lakh crore rupees. Surbhi Upadhyay joins us to fill us in with more details. Surbhi?
Well, what a fantastic Thursday the bulls have had, and they are stamping their authority on the street. And today it was defying all odds, defying what were very weak global cues. You know, some of the markets in our neighborhood, like the Hong Kong Hang Seng, for instance, they were down almost 3%. Japan was down 2%. Europe, while we were trading, was down about 1%, but the Indian market kept marching higher. In fact, what we're seeing in the market now is seeming like a bit of a mini melt up. Why do I say that? Because on an intraday basis, the Nifty actually crossed the 19,500 mark today, and it has taken just 6 sessions to do that. From 19,000 to 19,500, we're talking 6 sessions. It didn't close above that level, but it was pretty much there on an intraday basis. So what led the rally today? It was a mix of FMCG stocks and continued buying in some auto names as well. So when you're talking FMCG, names like Nestle, Britannia did really well. On auto, some of the names like Bajaj took a backseat. Eicher continued to be under pressure because of the huge disruption we're seeing in the top of the bike market. But you had names like M&M, Tata Motors, they were heading higher. Reliance lent good support to the market as well. And the banks joined the party in the second half. So names like Kotak Mahindra Bank, Axis, even HDFC Bank for that matter, they all started contributing towards the afternoon. OMC stocks, by the way, have had a very good rally on expectations of more capital coming in from the government and higher earnings and better marketing margins. So IOC, BPCL, HPCL, all stocks up between 2 to 4%. Mid-caps have been sizzling. Whatever doubts there were at the start of the week on the mid-cap rally, they've been put to rest today. The advanced decline ratio was super strong. Some names, Seat moving up 20% on circuit, JK Tyre, real estate names like Lodha, Macrotech developers, Purvankara, all of them seeing very, very sizable gains. I'll just end with a small data point on flows. FPI flows so far in July, and that's just 4 trading sessions. They are already 35% of the total net inflows we got in June. The numbers, FPI flows 16,800 crores so far in July in 4 trading sessions, as opposed to 47,100 odd crores that we got in all of June. They say you don't bet against money, and that's what the bulls seem to be doing as the market continues to march higher.
Thanks a lot for that, Surbhi. Well, in market opinion, Richard Harris, Chief Executive at Port Shelter Investment Management, believes that the Indian markets will continue to outperform as compared to the other markets. However, Sridhar Shivaram, Investment Director at Inam Holdings, expects a slowdown in consumption. Let's hear out what they had to tell us early today.
India is not going to buck the overall trend of the global markets. It's been a strong outperformer for various reasons. You know, the economy is kind of held up. It's benefited from outsourcing. It may well benefit from warmer relations between the US and India. So it certainly outperformed in that extent. The question must remain that did the end of June form a point for a reversal? And of course, markets have been a bit sluggish since then.
There is every data point that we get, companies that we speak, there is slowdown in consumption. But I think that's a space worth watching, which is the entire manufacturing space. I think India's coming of age as far as manufacturing. We've been hearing this thing that, you know, India's potential of manufacturing. I think finally I'm seeing, you know, on the ground, things really shaping up.
Well, moving to the second headline now, the Nifty Auto Index gained over 1%. Top motor names like Mahindra & Mahindra and Tata Motors also surged between 2 to around 5%. The Federation of Auto Dealers Association has released the auto sales for the month of June. Retail vehicle sales witnessed a 10% growth on a year-on-year basis, with all segments recording positive performance. The passenger vehicle, three-wheeler and tractor segment recorded the highest ever June sales. Commercial vehicle sales, they surpassed pre-COVID levels for the first time. However, two-wheeler sales were still below the pre-COVID levels. Well, staying with the auto sector, then Eicher Motors was the top Nifty loser today. Brokerages, they have lowered their target price on the stock. In fact, the company saw its market cap being wiped out by close to 12,000 crores in 3 days. The downgrade comes after Bajaj Auto and Hero MotoCorp launched new heavy engine bikes, which will pose a direct challenge to the Royal Enfield. Rima Tendulkar is standing with us to fill us in with more details. Rima?
Thanks so much for that. So today, both UBS and Kotak Mahindra, Kotak Institutional Equities has lowered the target price on Eicher Motors. UBS has a neutral call on Eicher Motors. They believe the loss of potential Royal Enfield customers is imminent. We could see replacement purchases being triggered as RE customers look to upgrade their existing 350 series. Kotak has a sell call on Royal Enfield, on Eicher Motors, with the target price going all the way down to 2,720. According to them, Kotak Institutional Equities, Royal Enfield may have to cut prices if it has to defend its market share. And according to them, the market share of Royal Enfield will fall down from 90% to 75%. They also bring down the EPS estimates because, one, they're assuming lower volumes, and two, they're also assuming lower EBITDA margins. So Eicher Motors continues to remain under pressure for the third consecutive session, and now brokerages are taking note of the competition and bringing down their target prices and EPS estimates. Back to you.
Thanks a lot for that, Rima. We'll move into the third headline now. Marico slipped in trade after the company's volumes grew in single digit on a yearly basis in the month of June. The company's rural demand was also lower than anticipated. Manglam Malu joins us to fill us in with more details. Manglam?
Well, that's correct. So Marico reported a weakest set of first quarter update this time around, and the company said that the primary volume growth this time around was marked by one-time internal and external factors. In fact, the anticipated pickup in rural demand also remained elusive, and as a result of which the company saw low single-digit volume growth in this quarter. And remember, there have been a lot of price offs over the last 1 year. The company's been passing them to consumers. So despite low single-digit volume growth, the consolidated revenue for the company in the quarter declined by low single digits as well. So volumes have grown, revenues have declined because prices have been cut. However, there are a couple of silver linings here. One, margins have expanded. So the expansion in operating margin will drive double-digit growth in the company's bottom line. That's a big positive. And secondly, because the first quarter was marked by some internal one-offs, the company actually sees a visible pickup in the coming quarter as well. But up until now, we've got strong updates coming in from other companies and strong updates expected from other companies as well. So maybe the street will give Marico one more quarter when the visible demand picks up.
Thanks a lot for that, Mangalam. Well, staying with the FMCG space, Godrej Consumer also tumbled close to 2%, despite indicating that sales growth will be in double-digit on a consolidated basis. In their first quarter update, the CFO, Samir Shah, said that the gross margins may expand by around 8 to around 10% on a year-on-year basis. Let's hear him out.
Yeah, so gross margins have seen significant expansion, and we are quite pleased with the quality of profits, which is gross margins expansion, increase in media investments, which in turn drives strong volume growth, lower controllable cost, and healthy profitability. So gross margins, my senses, will see anywhere between 800 to 1,000 bips of expansion on a YOY basis. We also had a relatively low marketing spends in the base quarter. But we will, kind of see again meaningful increase in marketing spends. My sense is it will be close to around 10 to 11% as a percentage of sales. And with lower controllable cost, we still expect very healthy EBITDA growth.
Well, moving to some stock-specific news then. Once valued at over $5 billion, unicorn PharmEasy has had a rough run. And in its latest round of fundraising, it may have to accept money at valuations that are 85 to 90% off its peak. Ekta Batra joins us to pinpoint what has led to such a sharp fall in valuations in just 2 years. Ekta, what's ailing PharmEasy?
Thanks for that. Well, one of the biggest problems the industry watchers say is that PharmEasy expanded too fast too soon. The valuations of the company rose rapidly, aided by the COVID-19 froth around healthcare companies. It entered into the unicorn club with a $1.5 billion valuation in April 2021, and in just a matter of few months went to around $5.6 billion in terms of valuation. The company at the same time in 2021 went on a rapid expansion spree to position itself as a broader online healthcare firm, say industry watchers. The company shelled out around close to 6,000 crores on 3 acquisitions, from Indian online healthcare platform MedLife to Bangalore-based supply chain firm AcnaMed, and its biggest bet, Thyrocare, the listed diagnostic chain, which PharmEasy bought for over 4,500 crores. The company took on debt to fund a lot of the expansion, pledging 100% of its stake in Thyrocare to fund the $600 million buyout. As of September 2021, the debt stood close to around 2,500 crores. The company planned a $1 billion IPO to pay it off, but was eventually shelved. It eventually took a $285 million loan from Goldman Sachs to pay off their earlier debt, but breached the loan covenant. The acquisition, it seems, didn't pay off as anticipated. AcnaMed's loss has widened over 10 times in 1 year. Thyrocare's valuations have plummeted 60% from the time PharmEasy bought it, with 100% of the promoters' shares pledged since September 2021. The diagnostic business has also been impacted by factors such as COVID-19 gains petering off, competition in the space, quality perception issues and transition issues, and fundamentals such as margins worsening to as low as 18% from a peak of around 50%. Now, on the other hand, the online pharmacy space has been weighed down by fierce competition and regulatory uncertainty. Additionally, industry watchers say platform service companies have had difficulty scaling up post-COVID-19 as consumer behavior hasn't been as sticky as anticipated. The fresh round of funding is expected to be used to clear up the current loans with the company. The company, which logged its first EBITDA profit of around 14 crores in April, will aim to improve financials. Lastly, another trigger to watch for will be the journey of Thyrocare and whether a stake sale will be contemplated.
Thanks a lot for that, Ekta. Well, time to slip into a short break, but stay tuned. We'll be back with the other top headlines that we're tracking for you. Welcome back. Well, let's get straight to the fourth headline that we're tracking for you. Tata Power gained over 3.5%. The company has secured a smart metering project worth around 1,700 crore rupees in Chhattisgarh. Surbhi joins us to fill us in with further details on that front. Surbhi, what were the details? Tell us more.
Thanks so much for that. So that's right, Tata Power is on our radar, and that is because the company has received an order worth 1744 crores to implement smart metering project in Chhattisgarh. Now, this is the third company in the last 3 days that has received a smart metering project order. Now, Tata Power will install and maintain 18.6 lakh meters in Chhattisgarh. So the cost per meter comes down to 9,376 per meter approximately, and this is in line with what Genus Power had also told us earlier, that their cost per meter will come about to 10,000 rupees per meter. Tata Power project will be spanned over the period of next 10 years. So we'll see how the execution works out for these smart meter projects. But for now, Tata Power is surging in trade.
Thanks a lot for that, Surbhi. Well, let's shift focus to the banking sector then. Private sector lender DCB Bank rallied in trade after the Reserve Bank allowed Tata Asset Management to raise stake in the bank. The AMFI can take its holding in the bank to 7.5%. The approval will remain valid for a period of 1 year from the date of RBI's letter. Abhishek Kodari joins us to fill us in with more details on that front. Abhishek?
Well, DCB Bank has RBI approving the Tata Mutual Fund to have a holding of about 7.5% in the bank. So currently Tata Mutual Fund holds around 4.95% stake in the bank. The approval is valid for a period of 1 year from 5th of July 2023. So Tata Mutual Fund is also advised by RBI not to increase their stake beyond 7.5% in DCB Bank. Back to you.
Well, let's focus on Hindustan Zinc. The stock was up by close to around 7.5%. But before we get to the news point, just want to tell our viewers out there that there is very limited float in the market, because you have the Government of India that has close to around 65% odd. You have the Government of India that has 30% stake out there. You have the promoter in there. That's the Vedanta group that has close to 65%. So between them, they have 95%. Besides that, you have a couple of institutions that have 2% stake in the company. So effectively, the free float in the market is only around 3 to around 3% or thereabouts. Now, the reason the stock was excited in today's trading session is because they're going to be considering an interim dividend on July 8th. They've also given the record date. The record date will be the 15th of July. Now, in the last 1 year or so, they've declared dividend. 3 or 4 times is what they've declared. And if you just sum that up, they've declared 75 rupees and 50 paise of dividend, which demanded a total payout of around 31,900 crore rupees odd. The problem this time around is all the cash that was in the books. Let's get some of those graphics up. The problem this time around is most of that cash in the books has already been taken out. And now, in fact, they're net debt as we speak. So how do they fund this dividend payout is something that the street will look forward to. But for the time being, the street was excited because we did see that that announcement came late last night that they're going to be considering paying out a big dividend. Well, in some moving on, then in some brokerage outlook, oil marketing companies saw huge gains on the back of positive brokerage notes on the sector. The key stocks, they rallied between 2 to around 4%. Brokerage firm IIFL believes that OMCs can report the highest ever earnings in FY24. Sonal joins us to fill us in with more details. Sonal, tell us, what are brokerages saying about OMCs?
Well, all marketing companies, they're in focus because of the improvement that they've seen in their fundamentals as well, and that's what brokerages are bullish on. Expect Q1 to be a very strong one across the space. Jeffrey says that OMC should benefit from supernormal margins in the marketing segment, which will offset any weakness that they're seeing in the refining segment. HPCL should be able to do better here because they have a higher exposure to the marketing segment, around 54% of EBITDA from there versus IOCL and BPCL. Kotak says that OMC's auto fuel recovery, they actually increased to nearly 250 to 250 billion rupees, that is in the first quarter of FY24, and they expect OMCs to report strong numbers as well. ICICI Securities says that EBITDA and PAT for all the three companies will see an improvement both on a sequential and on a YOY basis, and IIFL is of the view that FY24 could be a record year for OMCs. They will be benefited by importing of the Russian crude in the overall product basket, and if the benefits actually come in, they will see a benefit of around $2 to $3 per barrel. barrel. Right now, India's crude basket has 25% of the crude coming in from Russia itself, and the landed cost here is $9 to $10 per barrel lower than the Brent crude pricing. So it definitely will impact their, or at least benefit their refining and marketing margins. This is what the street is bullish about.
Got that, Sonal. Thanks for that. Well, the fifth headline today, the minutes of the Fed's June meeting showed that policymakers, they decided against a rate hike over concerns of economic growth. However, most members believed that more increases at a slower pace will be necessary as inflation continues to remain at elevated levels. CNBC's Steve Leisman gets us more details on that. Steve?
All saw future rate hikes as being appropriate, and some even wanted to hike by 25 basis points at the June meeting. We don't know how many some is. We know it's less than many, and it's more than a few. The reason they wanted to hike was because they saw the labor market as tight, and they saw few clear signs that inflation was returning to the 2% target. Most said, however, the Fed would benefit from taking a little more time, dealing with the high levels of uncertainty that were out there. Those uncertainties included the lagged effects of monetary policy, as well as tighter credit conditions from the banks and what kind of effect that would have on the economy. Almost all saw inflation risks to the upside. Inflation, they said, was unacceptably high and slowing less rapidly than expected. And an interesting comment here in the minutes, some saw the effects of higher rates on housing bottoming out. In other words, they had already gotten as much tightening as they're going to get, or easing in the housing market, and it was already had already bottomed out. We've seen that in some of the economic data. Some saw downside economic risks and upside risks to unemployment. So there is a dovish wing to the party there, to the FOMC. Real GDP was seen as resilient, but expected to slow. And just a couple more here. Consumer spending was stronger than expected. A few people were worried, though, in the committee that consumers are facing increasingly tighter budget constraints, including from less savings. The labor market was seen as very tight, but payrolls were expected to slow. Finally, tighter credit conditions from the banks were likely to weigh on economic activity. And in fact, the staff is still forecasting, that's the Fed staff, still forecasting a mild recession in the second half because of those tighter credit conditions. But in general, they see the effects as uncertain. And some even said, you know what, it ain't coming.
Well, on to some more specific stories. An association of mutual funds in India have released data on categorization of stocks based on their market capitalization. This data will be valid for the second half of the calendar year. Surbhi Upadhyay is standing by to fill us in with the highlights of that data. Surbhi?
Mutual fund body AMFI has released the market cap categorization for stocks which will be valid for the second half of the current calendar year, that's 2023. This is a biannual exercise, and it has a bearing on how actively managed mutual funds meet their stock selection mandate when it comes to market capitalization. What's interesting in the latest review is that the share of large caps in the total market capitalization has actually gone down. Not too much, but slightly. It's gone down from 69.4 in the previous version to just about 68.3 at the end of June. This is, of course, courtesy the sizzling rally that we've seen in the mid-cap space. And throughout the months, April, May and June, we saw that rally in mid-caps and small caps. So their share in overall market cap has gone up. Now, the other interesting fact, Mankind Pharma, the bumper listing of 2023, has actually directly leapfrogged into the large cap category. That stock has seen a gain of almost 24% since listing. Let's come to the movers and shakers themselves now. The stocks that have moved from the mid-cap category to the large cap category are on your screen. Let's take a look. JSPL, PNB, IDBI Bank, Canara Bank, TVS Motors with a huge auto rally, Tube Investments, and as I said, Mankind Pharma, direct entry into the large cap space. Now, the reason we have coded these in green is that in general, as stocks move up the market capitalization ladder, they become more discoverable and can end up attracting more local as well as global flows. Now, let's look at the ones that have actually slipped from large cap into the smaller category, the mid cap section. Many of the names in this list actually reflect the market's subdued sentiment towards these companies. So let's take a look at them. Nykaa, JSW Energy, Tata Elxsi, Indus Towers, Page Industries. This was a big disappointment. Remember, the results for the previous quarter were a big disappointment, lots of selling. Macrotech is interesting, though the stock has started rallying off late. InfoEdge is the other one. So these are the names that have moved from large caps to mid caps. Now let's take a look at some of the small caps which have become mid caps. Again, this would be green. Interesting names coming up over here, and that includes the likes of RVNL and Bharat Dynamics, which have been really the poster boys of the monster railway as well as defense stock rallies that we have seen. The other names, they include the likes of Punjab and Sindh Bank, Carborundum, Bank of Maharashtra, FACT, among the others. Now let's take a look at stocks that have actually slipped. Again, now we're talking about mid-caps, which have come down to the small-cap category. These include the likes of Piramal Pharma, Tata Teleservices, Nippon Life AMC. AMC stocks were hit hard when the whole TER issue was playing up. Clean Science, Blue Dart, Gillette India, Dr. Lal Pathlab. We know this whole talk of a lot of competition in the diagnostic space. So all of these falling to the small-cap category. New listings, by the way, this year have been very, very interesting. And a lot of these new listings have debuted in the small cap segment. These also include some of the very high profile listings in the EMS, or the Electronics Manufacturing Services space, the likes of Avalon Tech as well as EQ Lighting. Remember, EQ was the one that debuted with a 45% gain on listing day. Now, just remember that what you're seeing here, this is a categorization that doesn't impact any of the passive funds. The impact is on active funds. It doesn't necessarily mean that there are more flows coming into the stocks that have moved from mid cap to large cap or from small cap to mid cap. That's because the discretion at the end of the day lies in the hands of the fund manager, whether he or she wants to increase weights or decrease weights. So even if, let's say, a mid cap does become a large cap, if the fund manager feels the stock needs to move out or they need to sell down a little bit, that will happen. So there's no direct one-to-one correlation in terms of more money coming in these stocks, but they are these rankings, and this classification is a very interesting reflection of the overall market sentiment.
Thanks a lot for that, Surbhi. Well, on that note, though, we'll have to wrap up on this edition of Markets Today. Thanks so much for watching.